Hey guys, and welcome to the Working Money channel. Crypto Insight UK posting this. I see positivity on the timeline for the first time in a while, and I think you guys are seeing what he is seeing. We did recently see Bitcoin breach $50,000 per coin. So that just happened yesterday, and you guys can see here on the hourly, we are finding resistance up here in this area, right up in and around here. So a $50,000 BTC right there, dead center in that resistance level. But he's saying here, positivity on the timeline. Of course, Bitcoin is rallying and the crypto community is rallying along with it, so to speak. And he says, and I'm glad we are in a period where we can all win together. This period is normally longer than people think, but shorter than people hope for. Don't get caught in the hype. Stick to your plan, but enjoy this window. Bitcoin is at 50,000 in the last week. We've seen 236 billion of fresh capital added to the total market cap. So guys, I'm going to get back to this number in a second. It's 3.5 years of pain for a few months of green. DFTU, as Raul Powell says. So yeah, all that advice checks out. You know, this crypto rally is likely not going to go up as long as we think it will. And, that was part of the mistake I made last time for my Patreon subscribers. You are going to be able to follow what I'm going to be doing this bull run. And so we're waiting for the pumps to get those cryptocurrencies up close to their all-time highs, maximize profits, squeeze out as much as we possibly can this bull run. And for only $5 a month, you guys can follow me if you are interested in seeing what I'm trading. And this is just the beginning. A Bitcoin trading at around $50,000, that is a good start. So as you guys can see, the fear and greed index, now we are leaping further into the greed category. Right here at 72, we see Bitcoin is up 4.38%. It is obviously leading the pack at that psychological level of $50,000. We got Ethereum is up as well, 7.78%. Solana is up to 9.54%. BNB coin up 3.01%. XRP is even up 2.15%, albeit not as much as some of these other altcoins. But guys, XRP will have its time in the sun. I know you're all wondering when it's going to pump. Well, we're going to take a look at that a little later. So within the last 24 hours here, you guys can see altcoins have been performing quite well, actually. We can see the market cap up here is now up to 1.88 trillion. So that is about 2/3. If we assume, it's close to $2 trillion. 2/3 of what it was in the last bull run. So in the last bull run, we saw a $3 trillion market cap. But check this out, 24-hour volume is up by 79.56%. So a lot of trading in the last 24 hours. But dominance, guys, so this is another metric we should be paying attention to. When Bitcoin dominance is over 50%, we're still not there yet. You know, when Bitcoin finally tops out, reaches that high, and then altcoins just kind of follow, that is when we really got to pay attention. So some things to suggest that, we're on our way, but this time it's different because, if we consider where we were at this point in the last bull run. Okay, let me just throw Bitcoin here on the daily. And if I show you guys where we were here, let me throw a horizontal line down in here. Back in December of 2021. Now, this was coming off lows. So back in December 2021, that was the last time we saw Bitcoin at $50,000. It hit 69,000 in the last bull run. And before that, it was September 2021. So September 2021, then it went to all-time high, and then it retraced back down to 50,000. So how is it different this time? Will Clement here posting this, okay, hovering around $50,000, and Google Trends for Bitcoin look like this. Now, this is important because we're not really, I don't think the mainstream is really talking about 50,000 at this point because they know it's just going to go higher, and they want to save that hype cycle for when it goes even higher. That's my observation there. I don't know. It's a guess, but just take a look, guys. The Google Trends here, we're not actually seeing any kind of spike. However, John Kotsaftis, he says no, and he's looking at another chart here, Google Trends, with the search term Bitcoin. And we did actually see a little spike yesterday, but we'll here discussing this point. You're looking at the zoomed in 7-day view. I'm showing you the 5-year view. So over 5 years, guys. So again, we got to zoom out sometimes, looking at where we were for the top in former bull runs. And then note over here, okay, sometime in late February, we did actually see another spike for Bitcoin. But now, guys, not even close to the top of a former bull run, and we're still down in and around here. So some things to be paying attention to. Now, There are some opposing viewpoints here, like from Ali Charts. Bitcoin has shown a pattern of entering a brief correction phase whenever the 30-day market value to realized value, the MVRV ratio, exceeds 11.5% over the past 2 years. The MVRV ratio recently crossed this threshold again, serving as a cautionary signal for Bitcoin traders. So he is saying, this is not going to continue to go up. It has crossed this threshold. It has gone above 11.5%. And usually what we see is a correction. So that is, I'm assuming that is what this line is here, this gray line across. And what we have seen in the past is a correction once we've passed that line. So are we going to see a correction now for Bitcoin? I mean, $50,000, a great psychological level that we've seen back again in December of 2021. And now we have surpassed that former high, that $49,000. So, I mean, I could see this thing kind of correcting, calming down. But as of now, we are still not witnessing that. So some interesting points here to be, well, of course, we got to pay attention to everything because as Raoul Pal says, DFTU, we cannot mess this up. This is our chance to reap the rewards from our grueling efforts. And so this is, again, why I have diversified my portfolio at Patreon. I'm going to be also talking about my Bitcoin price targets because I do hold some Bitcoin as well. So what else do we know, guys? And, what can we expect for the altcoin market too? Crypto Insight UK saying, holy crap, net 493 million inflow from a spot Bitcoin ETF. Okay, from spot Bitcoin ETFs particularly. Last cycle, we hit 69,000. This cycle, we have an additional demand. Worldwide issues that will lead to increased liquidity. Equities breaking out of an election year. So many things, working together here to perhaps see a Bitcoin price really, really surge. Barring a black swan event, we are about to send this thing up to the moon. So the other thing he does point out, retail is not even here yet. Guys, we haven't even seen the retail FOMO really kind of ramp up yet. The same kind of FOMO that we were seeing back in mid to late 2021, or actually we'll call it the entire year of 2021. It was pretty much late 2020. We did have in 2020, we did have the GameStop thing, and that was kind of something separate. But 2021, I don't know if you guys remember TikTok, celebrities, the Super Bowl ads, right? In early 2020, I think it was early 2022, probably those Super Bowl ads. But 2021 was a crazy year for cryptocurrencies, and you will know when the FOMO really does kick in, and we just have not seen it yet. So retail is not here yet. He's also bringing up the that Google Trends graph here. Bitcoin ETF flow, February the 12th. So the other thing is, who is going to be buying Bitcoin at this point in time? Now, Anthony Pompliano did make the rounds yesterday. One of his stops was CNBC Wall Street. Doesn't like Bitcoin, they love it. Okay, his assessment too of what is happening right now. Listen to this.
Buying the rumor, selling the news, but now we've come back to buying.
Yeah. I mean, look, the verdict's in, right? Wall Street doesn't just like Bitcoin, they love Bitcoin. If you think of these assets, there's been over 5,500 ETF launches in history. Never have we had a fund get to $3 billion in AUM in the first 30 days. BlackRock and Fidelity both just did it. So two for the first time in history. And then if you look at Bitwise and 21 Shares, ARK, they're both going to hit $1 billion this year or this week. And so now you have four funds that are going to hit $1 billion of inflows. But the most interesting part of this is the inflows. These funds are doing $500 million a day of net inflows. But there's only 900 Bitcoin that is actually coming into the daily incoming supply. And so when you look at that, that's like $40 to $45 million. There's 12.5x more demand for Bitcoin than what's being produced on a daily basis.
So I'm sorry, this interview was from a while ago, but the points still remain 12.x in demand for Bitcoin, considering, it's a finite supply. We cannot mine anymore any quicker. And not only that, the halving is coming up in 2 months? February 13th right now, March, April, so roughly just over 2 months. There's been over 5,500 ETF launches in history. Never have we had a fund get to $3 billion in AUM in the first 30 days. So that also speaks volumes, I think. Wanted to thank XRP Drops just for bringing that to our attention. Now, when it comes to Bitcoin, of course, altcoins usually perform better. This one from Merlin RAs here. This says it all. The last season, so 90 days, the last 90 days, and what altcoins have done. And it gives you guys kind of a nice graph here, ranking them in order. The top performers in the last 90 days. Bitcoin here sitting somewhere in the middle. And unfortunately, we got XRP down here. Well, I mean, it's not in last place, but not performing so great within the last 90 days. Now, is this something to be upset about? Is this something to be worried about? I think more importantly, I know there's been a lot of FUD, and I know a lot of people are just wondering when the heck Is this thing going to get off the ground? The Nike swoosh pattern still here intact, guys. The XRP chart is actually still looking very, very poised for liftoff. And this, this always happens. At least this is not my first rodeo, and I can say for certainty it was like this the last time when everything was rallying, XRP was not moving, and we were wondering what the heck was going to happen. It was probably, I would say, it was probably even more stressful last time because then we had the SEC lawsuit, and we really didn't know what was going to happen at this point. I don't know who was here for this. That was devastating because everything was rallying at that point. Finally, we got an XRP rally right in around here, right? And then we got the news of the SEC lawsuit, and that just sent it down. But guys, from that point on, we did hit an inter-year high. We probably could have gone higher, but we can't dwell on the past. We have to look at the future. So what's going to happen now for XRP? Well, let's analyze this. Of course, some of these coins are doing very well for good reason too. This is why I did diversify, and some of these coins still have not popped. So it's good because we're going to take profits as they come. When it comes to XRP, the building and the utility is going to be great for the long term. But guys, how high can we see XRP price for the shorter term now? There is a theory suggesting that we could start seeing real-world utility maybe at the tail end of this bull run when there is more liquidity in the market. Now, XRP drops pointing this out, 4 key elements that will serve as the foundation for success in a tokenized economy. Now, we know tokenization is happening, and they really want to launch more tokenized projects by 2024 and into 2025, coincidentally, or maybe not so coincidentally, coinciding with the bull run. So XRP, this was just from a report released yesterday from Ripple, enabling liquidity. Liquidity refers to the ability to buy and sell an asset without causing a dramatic change in the asset's price. Liquidity facilitates core treasury functions, supports business growth, and protects asset holders. We need on and off ramps, right? The process of seamlessly converting traditional assets to digital assets and vice versa is known as on and off ramping. This functionality is essential for enabling the easy conversion of value of transfer. Also custody, right? So Ripple purchased Metaco. That was one of their custody solutions. Security is paramount in the world of tokenization. Custody refers to the secure storage of digital assets. As we know in compliance, of course, compliance is non-negotiable. Businesses engaging in tokenization must adhere to current and future regulatory standards to ensure legality for their operation. So I will link this in the description of the video. This was all taken from Ripple's most recent report here, and he retweeted out their report here as well. So wanted to thank XRP Drops for posting that, guys. The utility, we're also going to see that with the current partnerships around the world. This one from Michael Branch. This has to do with NPCI, so real-time payment services between India and US banks. Are we going to see it soon? This just came out today. The National Payments Corporation of India and banks in the US and India are advancing discussions to establish a real-time payment link between the two countries, according to sources familiar with the matter. This initiative aims to leverage NPCI's expertise in cross-border payment systems. NPCI is collaborating with Indian banks experience in the Unified Payment Interface, or the UPI system, and foreign banks to develop models to connect pilot tests, etc. NPCI is working with the Indian and foreign banks to explore potential partnerships. So guys, they're also engaging with the Federal Reserve's FedNow, okay, in the United States, FedNow, which is leveraging Volente technologies. We know that has the ability to settle an XRP or its UPI equivalent, and seeking involvement from major US banks to facilitate testing and use case development. So because the United States recently did launch FedNow back in July, and because now we have XRP clarity in the United States, I think this is going to be a perfect storm. And, we're all hoping that this was going to happen kind of more fluidly, kind of more rapidly, I guess is maybe a more accurate description. But unfortunately, we have not seen it happen in that way. But guys, it's not to say that it's not happening in the background right now. I still do think these organizations are working really hard to get this thing off the ground, and I think it takes time. I'm not, and I know for a fact they don't want to rush it along. So there's just some more real-world utility news connected to some Ripple partners. Now, guys, we've got even more. Some of the bigger Ripple partners like Finastra, they have just announced another partnership. This one coming from Mike Manfield. Finastra and Tessellate debut a prepackaged trade finance platform. So Finastra is a huge Ripple partner, and they're a global provider of financial software applications and marketplaces. And they've now partnered with Tessellate, a global digital transformation consultancy and integrator. They today announced the launch of an end-to-end prepackaged service for faster and easier trade finance digitization. So this is Tigula Trade Finance as a Service, powered by Finastra Trade Innovation and Corporate Channels. they've enabled U.S. banks to automate manual processes and adapt to new demands with quicker, faster time to market and value via Finastra's Fusion Fabric Cloud. So banks can now seamlessly integrate fintech applications that use the latest technologies, such as artificial intelligence, blockchain, and automation tools. So you can see more integration happening in the back end on DLT technology on the blockchain. Trade finance is a complex industry, this is a quote, that is still reliant on manual and often fragmented processes. So they want to change this. This was coming from Jim McMahon, the managing director and head of enterprise sales at Finastra. Our combined service with Tessellite delivers the automation and intelligence needed to increase efficiencies and decrease processing times, risks, errors, and total cost of ownership. So there's more to this article. I will link it in the description. Don't want to go over the full thing, but I think it does touch again on more real-world utility in the space, leveraging blockchain technology for trade finance specifically, guys, tokenization, as we heard, and real-time payments, of course, Ripple's first out of the gate project that they have now, I think, gotten to the point where they're realizing, okay, we can do as much as we can now with real-time payments. So now we kind of have to let the partners kind of take it from here and really kind of start running on the XRP ledger and leveraging XRP in real time. All this to say, guys, that we are going to see more XRP utility. And we're already seeing a 68% spike in volume. So when looking at this chart and getting very, very discouraged, you have to remember what the past has denoted, and we have to remember that XRP does pump last and fast. Remember, the longer the base, the higher in space. And volume 2, guys, is denoting that we are seeing or starting to see more people getting interested in trading XRP. So this is recent data from CoinGlass. They're indicating a notable uptick in XRP derivatives trading with a significant 68.2 increase observed over the past 24 hours, totaling $867.89 million worth of trades with regards to XRP specifically. This surge in trading activity is complemented by CoinMarketCap's data of the 24-hour spot market volume for XRP. So we are seeing an uptick, guys, for trading in XRP. However, despite the apparent surge, obviously we are not seeing the price move. As noted here, a primary factor influencing this imbalance is the recent decline in XRP price. But guys, paying attention to the volume, I think that is really what is important here, because the more we see the volume go up and the less supply there is of XRP in the market, that is when we really start to see things move. And generally, generally it takes a while. And the video I did the other day, I was talking about the total market cap or the total to market cap compared to XRP and, just a time frame, a timeline. Whereas when you look at total to over that time period from right back in here, I have it right up here. And at this point here, that is when we finally saw XRP really start to move, March 2017. At this point, the altcoin market. So this is not even talking about Bitcoin. This is the altcoin market had already gone up 3,100%, and XRP still hadn't moved. And then, guys, at that point, XRP did finally rally. Guess how much? Boom, 56, 59, almost 60,000%. 58,919% roughly, give or take, just from March 17th all the way to January the 18th. So that was, 10 months? Okay, a 60,000% increase in 10 months. So, this base looking very, very similar to what we're seeing today. Actually, I would argue that this is actually looking better. That Nike swoosh pattern generally suggests that we are going to move higher very, very soon. It has in the past, but we do need Bitcoin to really kind of take off. We really do need Bitcoin to get above that all-time high before we really start to see, XRP move in. For that matter, any of the other altcoins really kind of ramp up. I mean, it's great that we're seeing, 10% here, 5% there, 7%, 12%, whatever. But guys, this is still just early days. Mitchell here on Twitter posting this, the last time Bitcoin was at $50,000. So we got to remember, okay, putting it into context of the last time it was at 50,000. Less than 50% of supply was held by lettuce hands, okay? Not diamond hands. People who were weak. Terra Luna was running a Ponzi scheme. FTX was selling paper BTC. GBTC premium buyers were getting wrecked. Precipice of fastest rate hike in history. Super Bowl crypto ads. Bitcoin today, though, you compare that to today, 70% of supply is held by diamond hands now. Passive Wall Street bid, 9 weeks away from the halving. Rate cuts coming later this year. And there are no Super Bowl ads. So, you compare that to the hype. We knew we were close to the top at that point. Now, guys, this is just the beginning, another phase. in this bull run, which should be getting us very, very confident, because if we're not seeing this yet, that means we are nowhere close to the top. The noise is quiet. The fluff is gone. No, we ride. So I wanted to thank Mitchell there just for posting that. So is this sustainable? Well, Michael Branch here bringing this up. And so reasons why we are seeing this surge. Bitcoin price soars as spot ETFs amass 10 times more Bitcoin than miner production. So guys, it's looking like this is going to be the trend all the way up. Bitcoin prices surge past $50,000, fueled by an unprecedented influx of investments from spot Bitcoin exchange-traded funds. These ETFs have managed to accumulate a staggering 10 times more Bitcoin than what miners were able to produce on Monday. So guys, supply and demand fundamentals are out of whack. There is way, way, way more demand now than there is supply of Bitcoin. More specifically, data shows that approximately $493.4 million, equivalent to around 10,280 BTC, flowed into spot Bitcoin ETFs as of February the 12th. Among these funds, BlackRock's IBIT emerged as the clear leader, attracting a massive $374.7 million. Fidelity's FBTC fund followed closely behind with a substantial inflow of $151.9 million. And then that was followed by ARK 21 shares and ARK B fund. Despite these significant inflows, there were minor outflows, so some movement flowing outward. In contrast, though, Bitcoin miners only produced approximately 1,059 Bitcoin. So, they can't mine quick enough for these people to buy it up. There's just not enough supply, guys. And this is why Pomp is saying, Wall Street loves Bitcoin. They are buying up 12.5 times more Bitcoin per day than the network can produce. The march to the new all-time high is underway if this continues, and I certainly think it will. Another clip here from the Bitcoin therapist. This is Michael Saylor, another big-time institutional investor, talking about Bitcoin. Listen to this.
I think a lot of this is just indicative of the popularity of Bitcoin as an asset class. It's now the world's most popular investment asset. It's novel, it's digital, it's global, it's unique, and it's uncorrelated to traditional risk assets because it doesn't come with exposure to any given country, currency, company, quarterly result, product cycle, competitor, not to weather, not to war, not to an employee base or supply chain. And so that makes it a natural addition to the portfolio of a responsible investor. There's 10 years of pent-up demand. People have been waiting for these ETFs, and finally, mainstream investors are able to access Bitcoin. And I think that's what's driving the surge of capital in the asset class. And initially, there was a rebalancing as people were moving capital between the futures market and the miners and MicroStrategy and the ETFs. But following that rebalancing, I think the assets found its footing. And now people are beginning to realize that there's 10 times as much demand for Bitcoin coming in through these ETFs as there is supply coming from the natural sellers who are the miners.
So way more demand. Again, Michael Saylor is also saying it 12.5 times according to Anthony Pompliano. So when are we going to see the rest of the altcoins move? Bitcoin moves first. Remember, greed is only in 72. We have seen it in the 80s and I believe even in the 90s. At some point, we are seeing a sea of green, but these numbers do have to get up. And guys, don't you worry, XRP will have its day in the sun. It usually is one of the coins that pumps last, and that usually does denote that the bull run is almost finished, so we're not there yet. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel, guys. We're so close to 100,000 subscribers. I'm going to be giving away 2 Ledger Nanos once we do hit 100,000. So if you listen to the channel and you're not subscribed, subscribe to the channel. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.